What's up everybody, Tom here with another video. In today's video, I'll be talking about the latest stock market news moving the markets right now. We'll also be taking a look at our technical analysis levels together for the S&P 500, Nasdaq, dollar index, gold, silver, and Bitcoin. It's all been about cryptocurrencies, the US dollar, and of course gold over the last couple of days. We'll be taking a look at why that is and more, so stay tuned. So guys, as we all know, one of the best ways that we can better understand the stock market movements is by having a look at a heat map of the biggest stocks in the S&P 500 and how they've moved over the last 24 hours. Yesterday was more of a recovery in the sectors that have been hot for the last kind of November month, and that's JP Morgan and other financials, and of course the energy stocks overall, things like Exxon doing quite well. We also saw some pretty big strength out of Pfizer due to some regulation changes in the UK and other countries around the vaccine. When we look at the indices though, let's have a look here. Yesterday started low, was bought heavily in the first hour by retail traders and of course Wall Street themselves. And then the close remained pretty steady. Remember, whenever you're looking at these kind of markets, it's the close that matters. That last hour of trade is actually where Wall Street does most of its larger trades. Common belief is they do it here, they often do it here. So just remember that when you're doing your analysis. Let's take a look at the sectors. Yesterday, as we mentioned, energy was the one that most people were picking up. That really had the strength in it for the day. Financials, XLF also did well, and really the rest of it was relatively flat across the board, and with some being down. So it seems like for this next couple of months, we're still going to basically be seeing energy and financials possibly leading the board a lot of the time, and that's because the market is fully in what's called recovery phase right now, at least traditionally based on what it did during the GFC. The first kind of 3 to 6 months of the recovery phase there were all about the beaten down sectors, and that seems to be what's happening right now. When we take a look at CBOE put call ratios for Wednesday, 2nd of December, what we'll see straight away is that our total put call ratio is getting kind of low, 0.68. We've also got a volume of all sums of products, 3.16 for calls versus 2.144 for puts. So that means as we melt higher on the stock market, we are seeing more calls being opened. Even our S&P 500 put call ratio was down to 1.54. So it's time for us to really be a little bit careful. If you're long, obviously the price action is telling us long in the markets. But that doesn't mean that we can't have some caution for other money that we're looking at investing or of course trading in the markets right now. We're getting higher, but we're melting up very slowly, not with the kind of volatility that we saw over the last couple of months. We take a look at all the main indicators, things like market momentum or breadth is still looking very good. We're seeing all of these stocks rising across the board, not just what we had during that kind of August, July months, which was mostly technology, and that wasn't healthy for the market. Now we're seeing a general broad kind of momentum in stocks across the market. But the fear and greed oscillator down here is still very high. Take a look at this reading. We're still above 80. We're still holding that level. I'm going to continue watching this on a daily occurrence to see how it's kind of loading up, because this type of thing should have you concerned. If we have extreme greed in the markets, we have a huge amount of calls opened as well. That leads to things like expiration dates for options being very important levels. So let's get straight into the technical analysis together. One of the things we're looking at this week, US dollar index. We saw it get through that 92. It came back, tested the 92 from the bottom to the top. You can see it found instant resistance here on the smaller time frames and has continued selling off. If we go down to things like the 4 hour, you'll notice the 4 hour 20 has been a pretty good little sell-off zone. We saw selling here, we saw selling as it got through to the 92 there, and it didn't even get to the 20 yesterday before selling off. So this is actually increasing as the dollar index tries to fill to that next 89 gap. Will it get there? Well, that's probably to be determined. But what we do know is that this exact level where it is right now was the last time it got picked up. Look at this 91, when it false broke through this 92 last time, it picked off right exactly on this level. We're right there now. So if a dollar bulls, we need a little bit of a turnaround right now. And then of course, if it gets through to a new low, we expect it all the way back down to the 89 area. Dollar index is really worthwhile watching right now. On to gold. Well, gold had a very nice movement up. In fact, this is the 1 hour chart. And what you'll notice is there was a little double bottom we were talking about actually on the video on Tuesday. And when we were talking about that, we were saying that this level made a lot of sense. If you look at the weekly, which we'll do so in a minute, there's a 50 exponential moving average there right around this zone. Also structure off into the left-hand side. So we're first level of real structure for gold. We saw buyers come back in. We've also seen buyers, of course, push through this 1816 resistance, and then it came back down yesterday, hit the 20 moving average, one of our favorite types of trades where we have previous resistance acting as support, role reversal, a 20 moving average, and a beautiful bounce level. So the 20 seems to be holding this up quite nicely now. Worthwhile looking at other 20s, and of course 1850 will be the next resistance for gold. If we zoom this out, we bring up our horizontal line here, we can see support, support, and if we keep zooming out, support across the board. That's going to most likely act as a pretty heavy point of resistance. So for gold buyers, be careful of the 1850 level. It's certainly going to be one of those concerning zones. I'll just show you again on the weekly for anyone that's missed it or anyone that's new to the channel, why we thought this 50 was pretty good. It'd been touched once, it'd been touched twice and respected. Generally, third time's the charm in these kind of moving average plays that are on a big consistent time frame, and it certainly was so here. Nice little bullish movement there right off that 50 exponential moving average. Taking a look at silver, silver came off a beautiful support as well around that 22. Previous buying came in, buying has come in again. Silver's even more aggressive. People will know on this channel have been following it. I'm kind of bullish on silver even more than gold. And the reason why I'm bullish on silver is because it's used in economic basically repairment. So when they're repairing economies, they're doing a lot of building, a lot of infrastructure, a lot of those kind of movements. When they do that type of stuff, silver is demanded heavily. And we can see that when we look at things like the weekly charts. If you go back through old history of silver, you'll notice during the GFC, it has a mega kind of movement up followed by an extreme move as demand becomes incredibly important through this period. And then of course it goes to being a terrible investment again. But there is a time frame where it becomes a decent investment, and it still should be very, very important to look at. Big notable kind of levels remain the 26 for super silver bulls. Any break above 26 is going to be absolutely amazing. And that should signal, of course, all the way back to around that 30 zone. I'm sure everyone will be hyped for silver if it gets through those areas. Before we talk about the stock markets, let's have a look at Bitcoin, break it down. So we've been talking about this one quite a lot recently. Everyone's been hyped for Bitcoin. We saw it come back down to the 20. Obviously, a double bottom on the smaller time frame was the signal towards the long. We just got shy of 20,000 for Bitcoin. All-time highs were reached as well. And then we saw a miniature blow off. So let's have a look at that on something like a 1 hour chart. What you can see here is it gets to the point, it starts to coil, sells off, takes out, let's call it the weak hands here. We're in a bit of a flash crash, mini flash crash on the 1 hour, and then it's now consolidating. Remember, this is pretty normal. This huge consolidation below the 20,000 is pretty normal, and it signals that if we do get a new high here, it's not going to be respected at 20,000 most likely. It's going to bust 20,000 and go quite a lot. In fact, with Bitcoin, we know that it stops at 500s and thousands. So it could go to 21,000 fairly quickly once it makes a new all-time high. That's the type of thing that we're thinking about here as good potential in the markets. You'll also notice on the 1 hour chart that we've got a bit of resistance coming through this 19,200 area in terms of body closes. No body closes above that zone recently for the last couple of hours. And that means that I think this would be worthwhile looking at, potentially a break, pull back, find support, little lightning bolt, and then maybe movement up. Bitcoin still looks very long at this stage in terms of the price action, the way that the support is being found, and of course, everything else going on. Ethereum, we're on the 45-minute time frame here, but it doesn't really matter which one we go to. We'll go to the 30-minute just because most people have that on their charts. You'll notice very similar setup, resistance across the board, a series of higher lows and equal kind of peaks. And this means that if we start to move higher again, a break, a close above the 600 psychological zone here, a retest, little lightning bolt, and we should see something like a movement back up to the 630s, 640s, and possibly even to the promised land of something like that $800 level. What about the major market indices though? Well, the Nasdaq has remained incredibly strong. Let's take a look at this on a weekly just to get an idea of where we're at. So the weekly closed last week, at least on the futures here, above any other close ever. We saw a close very, very high. This week has maintained some bullish momentum. So at this point, it looks like, could we be going for this entire range? Sure, that's definitely possible. That would push us into some pretty high peaks. We'd be looking at 13,200 here for a completion of this. And the Nasdaq's been known to move very heavily and possibly too crazily over time. And if that continues into the Christmas rush, then we could be looking at all the way up here. I'm tending to side with caution right now. I'm not surprised or won't be surprised to see prices like this again in the not too distant future. So when we have so many calls being opened, we have a lack of puts being opened right now, and we've also got a lot of instability that can suddenly become a problem in the markets. Remember, it's what we don't see that suddenly becomes the big problem. It's like what's in plain sight becomes the problem after everyone in Wall Street decides it's a problem. We're at a point where the price action looks good to the bull side. If you're in, it looks good. But if you're waiting on the sidelines, it's very difficult, I think, to get in here. And that's just my opinion. I think it's just tough to buy it at these zones. We've seen the 20 exponential moving average acting as support through the weekly. Even a pullback back to that could be more interesting to us. We go down to things like a daily. Again, it's pretty bullish here in terms of market movements, but I could see a lot of little pullbacks happening, and therefore I'm probably on the sidelines for now if I'm not already in it long. If we go to things like the US 500, the US 500 is much of the same, slowly melting up and grinding higher. It hasn't touched a daily 20 exponential, this red line here, for quite some time. So look, there'll be a lot of oscillators going into the overbought areas, a lot of indicators showing that. I'm very well aware of those types of things, but I don't usually bring them up too much because we like to focus on the price action. And for now, the price action is basically saying more buys than sells. But what we know is that, again, there is a huge amount of optimism, a huge amount of FOMO across markets right now. And it even shows in things like Tesla. Tesla moved on that big announcement all the way from 440, 450, all the way to 600 very quickly. So there's a lot of money on the sidelines pumping into things based on hype, and that creates the opportunity for Wall Street to take advantage of that. If you're looking at kind of levels or characteristics of the market kind of dropping, you'd want to be looking at previous kind of little support. So we've got like a little zone through here. That might be pretty important, this 36.50. Even a break close below that now is kind of signaling a little miniature double top here. We'd have a peak, little kind of lower peak here, an intervening trough, and then of course a movement down is getting through the 20 moving average on a 4 hour. Underneath the 50 is going to be the key here. We see it finding support for quite a little bit. And then after that, you're talking about further sell-off pressure back down to things like that 35.20 we've spoken about a lot on this channel. So there's a lot going on in the markets right now. It seems like instruments such as gold and cryptocurrencies have been the best trades, and specific stocks. We also saw some big takeovers this week, things like Work and Salesforce. Obviously, that was great work for people that were in Slack, and I know a few of you were certainly in that in the community. We talked about it a lot on our Monday kind of live sessions. But yeah, it's difficult to find too many great opportunities in the indices right now, other than small movements in the scalping kind of way. All right, guys, thank you very much. If you enjoyed this video, please remember to subscribe and, of course, hit that like button. And we'll be coming at you tomorrow with another daily update on the markets around the world. Bye for now.